All right, folks, today's Sunday the 24th, 11 a.m. Eastern. Frank Zorrilla here. Let's do one of these videos that I used to do in the past, right? Hunting for this week's big winner. So I'm going to make it very simple. I'm going to look at the top 400. Top 400 is basically, if you haven't seen the video that's on YouTube already, and I posted in the room, the Twitter Zor Trades Alpha room. What it is, very simply, I'm taking the best performing stocks within different time frames, whether it's a month, 3 months, 6 months, year to date, 12 months, right? You put all those together, you take the top 250 names, you put it on the list. If you do the math, 250 times whatever, 5 different time frames, you know, over 1,000 names, but a lot of those names are the same. So like, for example, this week I took 3 months, 1 month. I took the best performing stocks from 52-week lows over the last 6 months, right? Whatever's up over 80% in the last 6 months from 52-week lows. I took 6 months, 9 months, and year to date, whatever it is. It's roughly about 1,750 names if you do the math. But a lot of those names are the same. They're in different time frames. So it comes out to 511 names, right? So this should be your go-to list, right? Every single week. This is like, you can narrow down the universe of stocks if you're looking just for momentum plays to this, right? So, and once we're there and we have all the names, I have here different columns. This one is 20. It says it's called 25 million share plus, but it's really 20 million. It gives me all the stocks that at least once in the last 40 days had traded over 20 million shares, right? And that tends to be significant. Like, for example, if we look at this stock, OCEA, traded 104 million shares here, traded 91 here, 83 and 73 right over here. You want to keep track of these things, right? And most of these stocks, like an OCEA that has these major big volume pushes, they all have the same look. Where stocks that were trading near 52-week lows, forgotten, these stocks have been dead forever. Then suddenly news comes out. This one, there was some type of news with pancreatic cancer, $6.85 billion market cap, stock goes up. These are the stocks you want to keep on your radar. Now, currently, the market environment, at least for me, since the 4th of March, the trading environment for most individual names, not just the big cap or the big 7 or the max 7, NVIDIA, whatever, SMCI, whatever the case may be, aside from those, hasn't been great. Or at least for me, it's been choppy, where, we had that little small window, I believe, from 220 to maybe 3, 4 was great. Straight up. 3, 4 on. It was a nightmare. It was a complete U-turn, complete reversal. But either way, so I'm going to go, and first I'm going to go through the list. I'm going to start with the names that have traded over 25 million shares on any given day in the last 40 days. And let's see if we can find some stocks. Here's Coin. Not for me with the way I look at things, for tomorrow. I'm looking at all these stocks to see if we can find something for tomorrow. What is my trigger? On every trade that I do, for the most part, 99.9% is going to the previous day high, okay? So I'm looking for things that have been consolidating. Something that's been consolidating. It's not up multiple days in a row. Here's one, AMD. Right? AMD had this little, so we had it on the list right over here on this inside day. I have these color candles. Yellow means inside day, okay? This over here, this light blue, it means inside day. However, with a plot twist, inside day on the lowest volume in the last 10 days, right? So when you start looking at charts, you have a stock that makes a big move, then it starts to consolidate. At the end of the consolidation, what you normally see is price contraction and volume contraction. And that's what tells you that the stock is ready to make a second move higher or lower, right? But it's getting ready to make a move once you see the price contraction and also the volume. So these little candles, so here we have an inside day, and then here we have an inside day on the lowest volume, in the last 10 days. And then here it's a bigger inside day on the lowest volume in the last 10 days. the problem that we had here that the stock gapped up. It gapped up. This is probably, I'm not even going to look at this is probably March 4th or March 8th. Okay. On March 4th, I believe on Twitter, I said, well, it was a Tuesday, actually, or maybe the 5th, that it was a great day. I felt like a great day to take some profits. And ever since this day right over here, it was a complete chop fest. But either way, here we have AMD. It was trading sideways here. Nice little flat base over here. It broke out. Now it's retesting that level along with the 10-week, with the 50-day moving average, which is the red line. So AMD for tomorrow, the high on Friday is 180.76. So that is the trigger price. The buy stop will be 10 cents above, which is roughly 180.86. The low on the day was 175.05. Right, and that is a stop. That is the initial stop that you can use. So the buy stop would be 180.76 plus 10 cents, which is 180.86. Stop loss initial stop is 175.05. Let's go on to the next one. And back on this AMD, right? We're not buying right here. The stock is up 1, 2, 3, 4, call it like 5 days in a row. We want, and if you look at the charts, right? What do we have here? We have a nice little inside day, a little consolidation, 1, 2, 3, 4, kind of like 4 days in a row, and then it gets a little sloppy. We want to get involved in the first day, okay, of a potential multi-day move. The first day of a potential multi-day move. We don't, like for example here, how we traded sideways, that goes up for 3 days. So here, we're pretty much getting involved in the first day of a potential multi-day move, and that's what we want. We don't want to buy something like this, right? Oh, it's up. Well, momentum, whatever the case may be, it's already up 1, 2, 3, 4, almost 5 days in a row, right? The proper buy point would have been right over here, and if you would have missed it, maybe this inside day over here, okay? All right, so here's GOTU. I'm not big in Chinese stocks, but again, here's a stock doubled from pretty much from the lows, right? 52-week lows right over here. These purple candles, that's when the stock on this day was up 4% or greater or more on 3 times the 20-day volume. The average 20-day volume. So the stock right here traded roughly 32 million shares. So what you can do is, I like to do this, 30.26 million. That's what it traded. I normally will go to, the news sites, Finviz, to see if there's some type of news that came out on this day, and I will jot it down here. But here's a stock, the high is 717, had a big move, retracing. Here's the 20-day moving average, the first test of the 20-day moving average since this breakout over here. I like the stock, GOTU, 717 is the high, and the low is 696. Stop loss, call it 690. Let's call it 685, give it some more room, right? But 717, you can add 5 cents. Stocks under $10 a share, you can add 5 cents. Let me see, just make it you can add 5 cents to that high. Here is real, right? This was through this high would have been the actual buy point on this one. I saw this one, but again, the market's just been horrible, right? So anytime that it looks good, the next day they take it apart. God forbid you mention breath on Twitter. The minute you mention bad breath on Twitter, the next day they shove it right up. That's exactly what they've been doing. Here's one that we had here on 3.6 right over here. Didn't do much, but then it just took off. But here's what we're looking for, right? This is 103 million shares. Stock, trading near the low. Something happens, stock goes up huge, and then you see the volatility, but then you start to see the contraction right over here, and even more right over here. ARM, again, similar situation, right? Takes off on, the video is $147 million worth. It took off 106 million shares, 111. It's a little sloppy, but then it starts to contract in the 20-day moving average. And it's just here. It's trying to move. It had here It tried to go, then the next day it broke down underneath the 21-day moving average, and then the following day they took it right up. So if you took your stops right over here, which you should have, the next day they took it right back up. That's the way the market's been trading. That's the way a lot of stocks have been trading lately since 3-4. But I'm long 321, 134.10. Stop right over here at this low. Right, CRWD, I like this one, right? So the high was 328.39. Buy stop 10 cents above stop. You have to use the day's low, call it 319, right? That's your initial stop. It's 319. You got to give these stocks some room, at least for me, for them to move higher and to move up and down. This stock right here traded 23 million shares. This was based on earnings. And I know it gave up the move because it had a big move in the after hours, but then the next day it kind of like sold off because the news were, the earnings were okay, but they're not this great. But either way, it's hanging in there, looking good. 20 for these big cap companies like CRWD, the 21-day moving average, which is this yellow line here, it tends to act as very decent support. So see how it's been riding this all along. So when you get involved with a stock like this, CRWD on the Russell 1000, technology name, some good earnings and sales and stuff like that, you can consider selling some on the way up, right? Once it makes this move, like for example, here it prints an inside day, goes up from 1, 2, 3, 4, 5 days in a row. And then after it's up 5 days in a row, you see how the move kind of like tends to peter out a little bit. And again, when you're swing trading, you're in the moving business, right? And what you want to do is to compound the money as quickly as possible is you want to get involved in the first day of a potential multi-day move. And then you want to sell the stocks that you have that are on day 4 and 5. You want to take that money and put it into the day 1 stocks, the stocks that are just getting started. Now, you get these small windows of opportunities and you get a bunch of these in a matter of a few weeks. That's when you get that momentum in your account, your NAV starts to go up, and then it's a matter of keeping it after that small window closes. But in a situation like this, like a CRWD getting back to that 21-day moving average, you can consider selling the majority here after 4 or 5 days and then holding on to the rest until it closes below the 21-day moving average to see if you get lucky. Now, this normally works a lot better using, letting some ride until you get taken out. Normally it works a lot better when we're coming out of a bear market or out of a correction and the moves are just getting started. Now, it might be a little different. PLTR, very similar situation, right? Traded here 420 million shares, 254 million shares. It goes up. This stock was on the list last week here on 320, long 23.96, which was right over here, or actually 320 right over here, right through this red candle high. I took it off here, right? Because bottom line, I needed wins. But this, if you look at the stock from a longer term perspective, it's been trading, you can call this a cup and handle, but it's done nothing for a few years. So this is one that we want to keep an eye on for more opportunities because it's got the potential to go up and trend for months. It has the potential, right? And this is big volume here, and this volume came due to earnings. Again, not bad. It's just that the market, right? Stock traded 34.7 million shares here. 321. I don't know if this was earnings. We need to check, but look, it looks okay. Here's a 21-day moving average. This is a big cap, a Russell 1000 stock. This 21-day moving average, this is like the first test. It should hold. That's the reason why it makes it an attractive risk-reward trade, because you go long here if and only if it goes through Friday's highs of 55.13, actually 55.23. Right, you put your buy stop 10 cents above, and then you put a stop right over here at this low, which is roughly $54 a share. And it looks okay, but again, the market is the only thing that it's just it just hasn't been there. Lyft is another one, beautiful, just very similar to Palantir, where it's done nothing for a long time, right? It's been trading sideways for roughly about 2 years. It goes up here in big volume, 109 million shares, 91 the next day. This is due to earnings. We long a few times, right? Right over here, through this high, right over here. Then we bought it again right over here, and it started to work out great. Market went down the next day, and then it's off to the races again. I'm out of this trade. Up 1, 2, 3, 4, 5 days in a row. But here's one. Here's a 21-day moving average, which is the yellow line right over here. The fact that this stock's been trading has done nothing for years, and it went up in huge volume. Again, very similar to Palantir. We want to keep this on the radar for when it sets up again, okay? Because it's got the ability, it's got the potential, since it's done nothing for a long time, it's got the potential to reverse that and trend for a while. And if you do the 4x3 list, which is here, the purple candles, you're going to realize that most of these stocks, if not all of them, at some point had met this criteria that it was up 4% or greater and on any given day in the last 40 days on 3 times the average 20-day volume. MNMDs, Mind Medicine, is another one to keep an eye on. 38 million shares. Deep Track Capital bought 6.6 million shares, 100% new. So did Commodore Capital. These are 2 hedge funds or institutions that they normally get involved in biotech stocks. When something big happens. SOUN, again, very similar situation here. 297 million shares, 101, 211, 299. Goes down multiple days in a row. On the list right over here, long 3.7 through this high. Decent. On this day right over here is when you had the IBD guys talking about a breakout, just because it broke this high over here. But the stock was already up 50%, right? And then it just went down under. But again, big volume. We got to let it settle down. Just got to pass 32,000 shares. Right, so here's another situation, very similar to the other ones. Here's a big volume, 33 million shares in some type of news announcement, encouraging results in regards to Nectin 4, whatever that may be, right? But then it starts to trade sideways. You can see here the tightness here, and then it just finally takes off. Right within this time frame, what normally happens with these biotech stocks, when they have a big move, they'll do a private placement, a secondary offering. It's always good to know who buys it. Here, some big guys bought it. Stevie Cohen, 0.72, bought 388,000 shares. Not a lot, 100% new though. Paradigm Capital bought 399,000 shares, 100% new. Adage, RA Capital, which is a big biotech. So I jot these things down so that way it might give you a little bit more confidence when it sets up. Cormorant Asset Management Institution bought 2 million shares in 3.8. They normally, you'll see them a lot when it comes to these type of biotech stocks. Nothing there, but just a matter of getting a feel of what it is that we're looking for, and market permitting. I can probably say with a lot of confidence that the best performing stocks in the short term, percentage wise, are going to come from this list. Again, some of these setups that I'm going to look at in a better market environment, where you can feel it, you can see it. Some of these setups will make the list, but it's just that the market environment has been horrible. So we already went through the 25 million shares, right? So we can continue to go straight down. I don't want to make this video long. I'm going to look at the inside day now. The stocks that printed an inside day. And an inside day, it could be a long setup or a short setup, right? And the context of it is what matters. Like this inside day to me would not be a long setup. It could potentially be a short setup if I was looking for shorts. Because all that means is the stock made a humongous move and now the momentum is kind of like waning a little bit. Lily, here printed an inside day on the lowest volume in the last 10 days. I'm long at 773.30 with a stop here. I'm using the 21-day moving average as a stop. And here's another situation, right? COHR traded 11 million shares right over here, big volume based on earnings, goes sideways. Here it prints right over here is down multiple days in a row. Long through this stock, through this high right over here, 63.32. I get long, 63.46, and then it starts to go up, and then the market shits the bed and it goes down. Then it sets up again right over here. I went long at 59.96, but took it off immediately. It's just that the market's been way too choppy. It's just. Let me just rephrase that. Not the market, individual stocks besides a select few. Blaze, here's another one that I have on my list. I'm flagged. I was long, went long on the list on 227, long at 1021. Had a big move. I kept the piece to trail it using the 21-day moving average because, again, the stock sideways for 1.7 years, right? Big base, right? This is, I guess, what you call stage one. It breaks the base. It starts and gets into stage two, which is where you want to be. Left the piece on. The last piece did not. It just did not work. It didn't work out, right? So what you want is when you sell something, you want to judge your trades based on pieces, right? When I bought the stock, did it go up immediately? Yes, check. My sales, right? After I sell the stock, after the fact, 5-10 days later, did they provide any? Was it a good sale, right? So in other words, when I took this, when I did this trailer, I put discretionary sale. The average price on my discretionary sale was $12.50, up whatever it is, 20%. My trailer, right now I have a trailer. I want to see if that trailer created any value, right? Over my discretionary sale. Did it create any value over $12.50? If it did, awesome. If it didn't, then it didn't. Then the trailer wasn't worth it. So that's the way you have to look at it. So once my trailer, I'm not going to base it based on my entry. I'm going to base it based on my discretionary sale average. So if I sold it at $12.50, anything under $12.50 is a loss in my eyes. Anything above is great. Okay, so that's the way you have to judge the sales. Right, so now we went through all the stocks that, these two columns, right? Listen, there are only 511 names. So we just narrowed down the universe of 6,000 stocks to 500 names. These are the best performing stocks within those different time frames. We can narrow it, you can go through this list every single day, right? It shouldn't take that long. If you don't have time, there are a few things that you can do. I can now look at the stocks that are within 4% of its 21-day moving average, right? So what that does is kind of like, gives you, maybe it tells you the stock hasn't done much in 21 days, has been going through a consolidation. That's one way to look at it. Also, if it's near the 21-day, that can also be potential support. But if you do that, then that just narrowed down the list from 511 names to 108 for tomorrow. So let's go through these. ARM, which owned Uber, it's already up 4 days in a row. Lilly on already. COHR, it's already up multiple days in a row. Deck. Again, Blaze, this is one that I would try again, but the market. And again, and sometimes what you want to do is eliminate certain trades, right? And the market environment and your rolling 5-day watch list, how your previous trades have done recently, tells you, okay, I need to start eliminating some trades that I would normally take on the different market environments. CRWD, we already put that on the list. SC already on the list. This one, again, better market environment, I would put it on the list, right? 99 million shares here. No news, just AI enthusiasm, and then 24 million shares here. This is something better market environment. You put a buy stop, at 255, 3 cents above Friday's highs, with a stop right over here at, call it 2.25, right? And this one, these small stocks, they have a potential to make a big move percentage wise, right? But once your account gets bigger, the percentages are not going to make a big dent in the accounts, right? For smaller accounts, these big percentages will do a lot better than a bigger account, because the problem is that sometimes, depending on how much you're risking, a 20% move, might move the needle, might move your NAV, your total account, by nothing, maybe 50 basis points. Where you take a stock like let's say for example a CRWD, and you risk the same amount, and the stock only goes up 4 or 5%, that's going to move the needle a lot more, just with a 4 to 5% move, compared to a 25% move on the CXAI, because you have to give it a lot more room as far as a stop loss. That's if you're using the way I use my stop loss, where I take the buy stop minus my stop loss level, and then depending on how much I want to risk, that tells me how many shares I can buy. Again, here is one, again, moved on earnings, 13.5 million shares. I think it was on the list right over here. See how it goes up, it pulls back, 21-day moving average. It's got a few days without breaking the previous day high. It finally did over here, did not take it. But here you can see, right? Finally breaks the previous day high. It immediately moves up. Not much follow through, but that's what we're looking for. Frog, we tried it right over here, up 10 million shares, EPS surprise 46%. Here it just didn't go. It triggered, went up a little bit, but it broke down. Then I believe it was on the list here and here, but again, it goes up and then it just comes right back in. These trading opportunities, these windows are getting smaller and smaller and smaller. Santa, 63 million shares. This is one that we bought right over here and right over here. And it just took off. It just slow, and then just took off. But very similar situation. 63 million shares. Bally Gifford institution bought 10.3 million shares on 229. This is one to keep a track, an eye on. Again, better market condition, I would take this. I would put this on the list. Going through this high right over here with a stop at this low. But for now, I want to stay with the stocks that have a little bit more volume. 244,000 shares, but again, trades 15.5 million shares here. Again, the stock is trading near 52-week lows. News comes out, big move. It becomes volatile, but then here you start to see the price contraction and volume contraction inside a NR7, inside day, another small candle right over here. I like this one going through this high right over here of 40.58. Okay, Jan X, and you can put a stop here. You got to give the stock room. I mean, because this stock can go all the way down to the 21-day moving average, and still it's done nothing wrong, right? And when you buy these stocks that made such a huge move like this, when you buy them when they're this far away from the 21-day moving average, it just becomes a little bit more riskier. It becomes a little bit more riskier. I like when the 21-day for these particular setup, I like when they catch up, like it's doing it now. But here, I would have to give it till 36. Now you can play it and say, hey, I'll use 38.58 or I'll use this low, but there's a very good chance that this stock will move within that price range, and it's just noise. It's done nothing wrong. If it goes up and it comes back to this low, it's done nothing wrong at all. That's the reason why I need to give it more room. Although that's going to mean that I'm going to buy less shares because my stop loss is just further away. Okay, so for now, listen, work is done. Spent 31 minutes, 3:25. So now we have 5 stocks, right? Right, 1, 2, 3, 4 of these stocks came from the scan that I believe in the short term is going to produce the biggest percentage winners in the short term within my time frame. Okay, that's days, weeks. Okay, 4 of them came from that list. Right, so now that we have a list of 5 names, now what we do is we put an alert on all 5. The alert is going through the previous day high. That's the alert. The buy stop goes above the previous day high. Anything above $10 a share, you use 10 cents. Anything from $5 to $10, you can use 5 cents. Anything under 5, you can use 3 cents. The key is that the alert goes off once it hits the high, the previous day high. The buy stop is just right above that level. We already know where the stops are going to be, so we should already know how many shares we need to buy. We do not know which of these which one's going to trigger. We don't know that beforehand. We do not know which one is going to be the biggest winner. We can take a wild guess. I know that percentage-wise, the biggest winner is not going to be AMD. It's not going to be CRWD, and it's not going to be SE. It's going to be Janix or GOTU. But the biggest dollar gains, the ones that are going to make the biggest difference in the account, is probably going to be the big ones. Because I just figured this out. I'm going to show you how. Let's say we have a $100,000 account, right? And we're going to risk 50 basis point per trade, right? So we're going to risk $500. So for AMD, I'm going to take 180.76 minus 175.05, 180.86. That equals $5.81. 500 divided by 581. That means I can buy 86 shares, right? 86 shares times 180.86. That's roughly $15,564. So that means if I have a $100,000 account, that's going to be a 15% position. Okay, if I get stopped out, I'm going to lose $500, which is 0.50 of my total capital. Okay, so let's say, for example, that this stock goes up. Let's also now do GOTU. GOTU, the higher here is 717. Let's make this the buy stop 722 minus, this is actually a close stop, 690. So that's 32 cents. That's a 32 cents difference. 500 divided 0.32, that's roughly 1,562 shares times 722. This is going to be an 11% position, right? So this is actually a very tight stop for this type of stock. So, but the point is that normally, typically, the big names are going to give you the dollar gains, right? Because the stops are typically a lot closer than with the smaller names, right? With the smaller names, sometimes your stop has to be 8 to 15% away, believe it or not, if you want to give it room. With these big ones, they can be a lot closer. So that allows you to buy more with that same type of risk, okay? So either way, we don't know which one's going to break out tomorrow. We don't know which one's going to be the big winner, although we have an idea. You can further narrow down this list, and you can say, okay, CRWD is in a good space. Let me look at the sector doing well. You can do that as well if you want, but I think here are 5 names that have a very good shot of working out. But more importantly, your buy stop and sell stops beforehand. Now it's just a matter of executing and trying to limit all the mistakes that we can possibly make when it comes to executing and putting on trades, right? And that is buying beforehand, stopping yourself out beforehand, looking at the market too much, and instead of using your stop loss, you start to use risk loss aversion, where you're like, okay, I don't want this to go red, so I'm going to sell it beforehand. All these things, that's all execution. The second part of execution is the ability to be consistent and do it in a consistent basis, because we tend to get in trouble where we buy something, it doesn't work out, then we don't take the next trades, and then we realize that the trades that we didn't take actually worked out. Then we take the other one, and then that one becomes a loss. And a lot of it has to do with the market environment, but that's sometimes stuff that happens. So we have to be consistent, right? We can change, depending on the market environment, we can change how much we risk per trade until we get some type of traction. And then once we get traction, we can start increasing that risk, right? And if you're able to read the market a little bit better, you have good situational awareness, then you can raise that risk immediately after 2 trades, because you've been going through, your scans, and you start to notice a difference. All right. So for tomorrow, Monday and Monday only, these are the 5 names on the list, right? Come Tuesday, do the same thing all over again, and narrow down that universe from 6,000 names to 500 names to then the list for Tuesday. Wednesday, same thing again. Thursday, same thing again. And we want to do is we want to try to be robots, right? And just try to get involved in the tightest setups with the best risk reward. So trade them well and be well.